This is Mr. Wilson. I'm going to take you through how to adjust a trial balance. This trial balance is a 2013 exam paper, and this is what you have to do as the first part. All right, so what we've got is we've got on the debit side, we've got our assets, expenses, and drawings down here. On the credit side, we've got our negative PPE, owner's equity, income, and liabilities. The adjustments are these ones down the bottom. So the first adjustment, with your pen, you're going to find this inventory at the end. And with that, I'm just going to get you to write minus COGS, because that's where it's going to go, and also current asset. So just a reminder that we're going to put it as negative COGS and current asset. We don't actually have to put it here in the trial balance. If you were, you'd put it both as debit and credit and put CA and negative COGS here. The next one's shop wages owing. So shop wages owing, which balance day adjustment is that? Hopefully you've got accrued expenses. So we'll write accrued expenses here on the credit side because it's a liability. And the figure for that's $400. So remember, accrued expenses is an expense owing without GST, and there's no GST indicated. So that's the first half. We've added it to the credit side, so we must add it to the debit side as well. And it tells us that it's for shop wages. So find your shop wages, cross it out, and you're going to add 400 to that. So we add 400 to the debit, 400 to the credit, so that'll balance. So we'll cross that one out. Advertising's being paid advance. What is the balance day adjustment for paying an expense in advance? All right, what side does it go on? Write it in. Now, if it's paid in advance, the rule is that it happens on the same side. So we've got prepayments there, and we find it's for advertising. So we'll find advertising up the top. I'm going to take $50 off that. All right, because that advertising belongs to next year, not this year. That's why we've taken it off. All right, cross that one off. Depreciation on office equipment, $2,000 a year. So simply we'll just add office equipment depreciation. And you'll put your 2,000 in. Because the figure got given to us, it's a merit rather than an excellence answer. So we've added it to the debit side. We have to add it to the credit side. So where are you going to add it here? All right, cross out the figure. And we add, that makes it 6500. Added 2,000 on both sides, so we'll balance here. Finish that one, cross it off. It's important you cross it off here because by crossing it off, it means we're done and we can move on using a very logical approach. The next one, depreciation on shop fittings, is based on a useful life of 5 years, residual value of 100. So we see shop fittings is 12,500. So we'll do the calculation, put your brackets in first, minus the residual value. So that gives us 12,400. And then you're going to divide that by 5. Right, we're going to write it in the depreciation on this side. Shop fittings. And you're going to add it also up to here. You might like to check that one in the calculator, but we've added 2,480 to both sides. Cross that one off. No depreciation on land and buildings. Good, we don't need to do anything. Website, 90% for the shop, 10% for the office. So this one here, what we're going to do is split it, and we'll put the shop part first. and do a separate one. And so nice and easy, you've got 870, that's your 10%. And your 90% is going to be this figure, 7830. Now, in the assessment, you have to get both that one and that one right in the right places in order to get the excellence mark. This one here will be as a distribution cost, and this one here as an administrative cost. Last one, invoices received for party supplies, including GST. So remember our clues, if it's including GST, it's going to be in accounts, and we have to split it. So we've got 1610. What do we divide it by to calculate the GST exclusive? That's right, 1.15. So put 1400. And the GST portion will be 210. So party supplies purchased. So is this going to be accounts receivable where we're going to get the money, or accounts payable where we're going to pay the money? Great. What side does that go on? All right, write it in. So the full amount goes with the account. So they owe us 1,610. So they owe us both for the, we owe them for the purchases and the GST. So let's have a look at the purchases part. That's the 1,400. Add it on. And the GST part, because we're purchasing it, it enables us to claim it back. So that figure we're after is 210. We'll take it off this one. Take off your 210, gives us 3990, which means we owe the government less because we can claim it back. Great, tick that one off. That's done. The next step in the exam is to go through and we'd write where all these go. So current asset as distribution cost, current asset, advertising distribution, current asset, distribution costs, drawings, COGS. So that's the next step. But we'll leave it for there. Finish that one off and then do 2014.